Hello and welcome to the latest edition of Parallel. I'm Perry M. Boring, the founder and president of the Chamber of Digital Commerce and host of Parallel. We are happy to have you join us today for Entering the Matrix, where we will explore crypto and blockchain adoption in the Middle East. The UAE is one of the most aggressive investors in blockchain technology. They are aiming to have 50% of government transactions executed on blockchain technologies this year. And Dubai wants to be the first city fully powered by blockchain technology. In 2017, we at the Chamber of Digital Commerce led the first ever blockchain trade mission to the UAE. This trade mission was sponsored by the US Department of Commerce and with support from the State Department. And during this trade mission, we had the opportunity to meet with Smart Dubai, the Blockchain Council, and officials all throughout the UAE. And one of my biggest takeaways from that trip is that the UAE wants to be if not the global leader in blockchain adoption. Now, fast forward a couple of years to 2021 to today, and we are seeing an entire crypto ecosystem emerging in this region. We'll explore this throughout today's program. Today's event is hosted in partnership with Matrix. They're the leading crypto trading platform in the Middle East. Matrix launched in May of this year. They're the first regulated virtual asset trading platform and custodian serving the Middle East and the Northern African region from the Abu Dhabi Global Market Financial Center. Our first discussion today is a fireside chat between Vasia Zupan, who's the president of Matrix, and Simon O'Brien, the executive director of Markets, Financial Services Regulatory Authority at the Abu Dhabi Global Markets. Vasia, over to you.
Hi, thank you, Perry, and thank you for the introduction. Welcome everyone in our audience, and good evening, Simon. It's evening on our side already. Simon, we met like in late 2018. I think it will be soon 3 years since then. It was just soon after the framework for virtual assets in ADGM was created. I was at the time looking from my different role in different company. We were looking at the framework, and now 3 years later, 6 months almost, or 4 months since Matrix launched as a first MTF in the jurisdiction, I was always interested in what is the origin, how the framework was created, because at the time was the most advanced, it's still today the most advanced, specifically crypto oriented, virtual assets oriented framework.
Thanks, Vasja, and thanks, Perry Ann, for the introduction. It's great to be presenting here, and Vasja, really looking forward to the discussion for the panel later on. Yeah, it has been an interesting few years since we first met, and a lot of things have happened both here and obviously globally in the context of virtual assets or digital assets or virtual currencies, depending on which jurisdiction and what you call them. For a regulator, we look back now and it was quite an early time we were getting in there, but we were aware at the time we were quite a long way behind what was happening in the industry. And it was important for regulators at the time to do a couple of things. And I think we've seen regulators since then do a few things. And some regulators went down the path of either prohibiting it, some went down the path of not saying much and watching. And we sort of decided, no, there were things that we were seeing being developed and we wanted to build the framework out. Regulators, when they build out a regime, often will try and benchmark. So the problem with virtual assets, and particularly over the last few years, is very little to benchmark against. There's not many regimes out there that have a framework to really either identify the risks and build a framework out to try to mitigate those, or at least provide regulated institutions a clear framework. If you go back to 2018, 2017, we started to first talk publicly around virtual assets. We published some guidance saying we're looking at the area. And then we specifically talked about wanting to look at the area for one reason, and that was to go and talk to the industry. So we visited a lot of firms in the US, the regulators in the US, Canada, the UK, Europe, Switzerland was a key part of that and still is. The Japanese FSA, what was happening in Korea and other jurisdictions as well. Now, what was coming up in that time in early 2018 and still happened for a few years after that, was there are obviously controls around AML and KYC, and very little above and beyond that, apart from a couple of jurisdictions. And at that time, New York DFS and JFSA were particularly leading the way in terms of regulatory developments. So we looked and thought about it and said, do we want to stay at AML and KYC? It's an extremely important part of a regulatory regime. But literally for about 5 minutes, as Helen, that conversation went and said, it's not enough. We need to put in full arrangements around what we felt were full arrangements around how to regulate that space. So we sort of think about regulating it in five buckets. We call it 5 key areas. So the first one, AML and KYC, and we'll probably touch on that a little bit more as well. The second one was in terms of technology governance. So we weren't seeing regulations around, for example, the virtual assets themselves, the underlying use of blockchain or certain protocols, the virtual assets coming in. At the time we looked at it, there was somewhere between 2,000 to 3,000. Now we're talking somewhere between 5,000 to 6,000. So there was nothing in that area. And we have the concept of accepted virtual assets and only allow certain ones in. The next step, and every time we visit the regulators in the US, for example, they always ask, how do we look at custody? And that's a key part of, for example, Matrix has worked long and hard with us around building a very clearly regulated, very clearly operational and robust custody system, as have the other firms and often standalone custodians as well. So we built in those controls in particular as well. One further area was the consumer protection side. Regulators will talk about consumer protection, but what's it really mean? And for us, it was the firms assessing the risk, and very clearly stating what the risks are relevant to them, to virtual assets generally, and also to the particular virtual assets they use. A final point on that, when I talk about virtual assets, I might mean what in the US or others means cryptocurrencies. So Bitcoin, Litecoin, Ether, and others as well, distinct from fiat tokens or stable coins, distinct from digital securities, distinct from derivatives and others as well. Very different from utility tokens. We do not necessarily allow those in. And I raise that because we see everything through the context of financial services. So we used to see, and we still thought back at that time, that much of the regulation was money services. So there was controls around what was coming in and what was coming out, but very, very little in the middle. And one of the key parts of what we really brought to the table, we think, and we've seen a number of jurisdictions follow us, is treat the exchanges as exchanges. So that means things like market abuse, proper settlement, proper recording of transactions, disclosure of market information, and those sorts of things. And importantly, I'm sure we'll touch on later on, market surveillance as well. So that was the journey, particularly built towards institutional, or our view, an institutional market. If we just stayed where the market was at the time around AML, KYC, if we saw fraudulent activity, market abuse, there were no protection. So we built all those things out. And the pleasing thing, it hasn't been in vain. We've seen a number of key firms, startups, and now we're seeing larger firms in the conventional space saying, maybe we might want to look at ADGM as being a place for stable coins or other activities as well. Without going into the details, it's meant that unique selling point of the firms in our jurisdiction is they're well regulated. It's also meant that most of the firms we've seen now, roughly 98% of the firms we've seen don't even get the chance to apply. So those who have come through our regime and have built out, we think, are of extremely high quality and obviously operating as regulated firms well on their own.
Thank you, Simon. This is that's great, and it explains in great detail why Matrix has applied for this jurisdiction specifically. It was really advanced framework at the time it started, and we started the journey. And B, the added security, added oversight, which I have experienced myself with European, US regulators. I haven't seen there. Like this additional oversight, I think it brings additional controls, additional security, and insurance in a way to customers that what we are doing is the right thing. We are not just left for us alone, but we have this. We have you helping us growing together and building this industry in the market here, but also we hope globally as well. And talking about that, there's one thing which also I'm always like, we are in contact on almost daily basis. But how do you see the new trends, the really cutting edge technology like NTFs right now, DeFi and similar things? We had some discussions internally, but I'm sure audience would be interested how the advanced regulators see this space.
Yeah, it's a really key point. And if you take one step back, what you're really talking about, Vastra, is how does an exchange and ADGM interact with a regulator in terms of building out its product and its, its new market? So there's two real aspects, I think, and I'll let you talk about some of the things if you want to around the areas you're exploring. But if you think about what we're talking about in general, is what technologies are you using in terms of yourselves as a regulated institution? So in our jurisdiction, you're an MTF, an ATS in the parlance of US, I would suspect, and a custodian. So it means in that sense, then we're having discussions around how the custodian will operate, how the MTF will operate, what types of rules do you need, how do you settle the transaction, even things like default and other things as well. So that's on that side, and our teams from both the the regulatory side as well as the technology and operational side are working through those aspects. It also means that if I think about from where we were even a few years ago as an old conventional exchange regulator, everything used to be servers, physical infrastructure and built. If you think of our conversations, it's about where and how do you host it in the cloud services, what needs to be established in ADGM, where do you host your primary and secondary operations, etc., which is really, really interesting for us. I'll come back to that in a second. The second part as well, which I think you really wanted to draw me out on, is in terms of the product line. And the big part of that comes from the markets in our market. The first thing they need to do is work out whether it's a financial instrument. Does it fit in with what we will call a security, a share, a bond, a unit in a fund, a commodity derivative, etc. And that's really important, so we establish what we're talking about. So now that you're already operated as an MTF, predominantly focused on virtual assets, it also means you can engage with us on other product types using the same infrastructure you're using now for trading, settling, and custody. You mentioned things like non-fungible tokens and other things as well.
Non-fungible tokens, yeah.
Now that's a really interesting one, and we get this question. If I was given a dirham or a dollar for every time we're asked that question, I'd be a wealthy man. The problem is one of the advantages we have, and the problem is, we're a financial services focused jurisdiction. So in that sense, if you come to us and say how you tokenize something, or to be frank, whether it's a certificated piece of paper identifying a share or a debenture or a treasury or a gilt or something, it needs to be in that context. So where we do have difficulty, but I think what's good for us is we've established what's a security, what's a derivative, what's a virtual asset, etc. How you structure that, whether it's tokenized, digital, certificated or not, we don't mind, as long as it fits within our definition of a financial instrument. And being an integrated regulator of all those things. So some jurisdictions will have a regulator focused on derivative securities, and others you can talk to us about that as well. What it really means then, and I think where our discussions may start to drift into in the years to come, is using your trading, as I said, settlement and custody platforms, and potentially other activities as well, to roll out the same technology, but using it for securities, derivatives and others as well. And that's really the choice for you. Our role as the regulator is making sure we give you a clear, very clearly identified path of what you can do in our jurisdiction, what you can't. So as I said, utility tokens can't come in, but if it's a security, a virtual asset, a derivative, a stable coin, unit in a fund holding, those things, they're all things that we can talk about. In terms of DeFi, just to touch on that bit, that's a really interesting one. I was on a call earlier today with regulators from across the board, and I won't say in which forum, and we're all asked what is one of the key areas that we're looking at. DeFi wasn't there a year ago, starting to hear it. It's starting to come through now as well. And we are going to look in that space. We're going to have to make sure that we can then engage with you and others as well in terms of how that will work. I'm not sure how. The good thing we have is we have firms like yourselves in that center, which we can consult on and work with as well. Have I answered that question well enough, Vashta, answering it, but also avoiding it like a regulator will best do?
Absolutely, absolutely, yes, especially the latter part. But I do understand, like for us, you mentioned a couple of things. One thing which is interesting is the requirements for the infrastructure, which is really high. And we have, the journey was, I must admit, not always the easiest for us to get there. But at the end of the day, the setup is really strong, and we'll touch that a bit later, especially on the aspect of market surveillance. Like in terms of the new products, some of these animals, to put it, it's hard to define, and I know that some of them will need it will be a journey to get them on platforms as ours. Non-fungible tokens, super hot, super interesting today for retail specifically. But as we are targeting more professional or semi-professional and corporate customers, that in our game is probably slightly different. So I think this working together and not necessarily kind of chasing every new shining item is the way forward. That's at least is our approach, Matrix, and I think we are well aligned there. Another thing which you also mentioned, that you were talking to regulators from other jurisdictions. How do you see ADGM is positioned in your view for any kind of global customers? Like Matrix, our aspiration is we're starting off from the region, we'll be serving the region, but eventually we are looking at the global market.
Yeah, it's a good point. And there's two parts we have to do in that sense. And there's a thing, there's a balance you have to make. Now, as we sort of touched on at the start of the conversation, there are a number of ways a regulator can deal with this. Our view was importantly to establish what we could capture and those areas that were not. So the first thing we did, and very happy to have done so, was even publish a framework back in early 2018 and give an updated guidance and continue to give updated guidance. And now we have firms in the center building out, launching across the custody, broker dealer, particularly in the exchange lines. It means that we can really adjust with your input. When we developed the benchmark, we consulted with many firms. So when we developed the framework, we consulted with many firms, and not necessarily to have them come to ADGM. So we spoke to firms in the US, particularly very, very helpful to us, to tell us things like, for example, build into your regime things like a high fee structure, a high requirement around market surveillance. And we even did things, and I'll get to it later on, around a small trading levy. So that immediately deterred, to be honest, some of the dodgy end of the market just didn't want to come towards us. To answer your question, then, what's that meant over the last 3 years was we still have the same regime. Now, most of the firms in the industry have at least maybe heard of us, and they will come and say, let's go and talk to ADGM. They might be like some of the other smaller jurisdictions around the world, and they quickly find out after talking to us, it's really not the case. It really has, in our minds, deterred those who just want to go to a jurisdiction to be regulated, but haven't thought about what it is the regulations actually entail. That's still continuing. And so what we're seeing now in the regulatory environment globally, and we are very close to a number of the key regulators in this space. We've worked particularly hard for that to make sure that we're not seen as a jurisdiction, as a safe harbor for the firms in their jurisdiction who flee what they're trying to do, only to come to us. I think some of the bigger ones have realized they might leave their jurisdiction, but they're not coming to ADGM unless they're actually a genuine firm. And we wish we had more time to explain what all that really means. It means, though, then, as each jurisdiction is looking at shutting down certain activities or looking at it, trying to work it out, when they come to us, our regime is public. It's very public. They know we have a large team to work with firms like yourselves, the applicants coming through as well, and work with the others as well. We're not going to change our view. Our view is quite clear. This is how we're going to regulate the firms. If you want to come and do it, please do. If that's part of your unique selling point, please do. Really, really interesting, though, with all the noise that's happening out in particularly the last 6 months, is there are those in the virtual asset industry, the crypto asset industry, that might approach ADGM. More importantly, there are many firms in the conventional space who are also trying to work out where to establish their activities. And they're now looking at places like ADGM. So you can imagine the risk and compliance team of large global banks and broker dealers trying to work out where to go and do this. They're starting to talk to us a lot more than we even expected, which is really, really good. And I think the implications for the firms in our center, we're hoping to see firms who will be traditional dealers in derivatives and securities, but will also maybe want to dip their toe into stable coins or certain custody activities, or just want to try a broking desk where they don't touch it, but they know it's trading in the reference price out of markets like yourselves because it's regulated, is also institutional grade as well. It's up to the market to determine. Our role is to give clear clarity is what we need. And our role, and I say this to you all the time, Bastia, if we're not communicating properly to you what we need, we're failing. So it's important for us, and we can only work with so many firms at a time, but it's important for us to do it. The firms that just come and say, we want to come into a jurisdiction, what can we do, and roll the red carpet, ADGM is not the jurisdiction for them.
Mm-hmm. Good. Let's go back to the topic that we touched a little bit earlier. So market surveillance. Like, my view is now for years already that AML, KYC, everyone is talking about that. Also, this more less regulated, more gray area players, the biggest ones, were addressing that to some extent. They started to understand that there's something needs to be done. Some sooner, some later have started to address those questions. But I think this is just the first step. The things that I see on the markets globally is that really market abuse and market manipulation is a big problem, which most of retail is not really aware of. There's talks about wash trading, pumping the volumes, but that's where things stop. Now, what we are doing here is something different. So it's not just us surveying the market, which we do. It's also you as a regulator. You are plugged directly into markets and surveying the markets at the same time as well. So what's your view on this area?
I think it's the most for my team, the markets team, it's probably the most important one in terms of its distinctive focus of what the firms require them to do. I think importantly, and if I think of the journey of the firms like yourselves in our jurisdiction, it's becoming one of theirs as well. So when you look at the markets, if we go back to all those early years when we established it, we did two things really interesting, which clearly stopped a number of firms who just said no thank you. The first one was impose, as you said, to treat them like an exchange, which meant you yourselves would have to regulate the markets. We don't have the concept of an SRO, so a FINMA and others as well, the NFA in the US. But what we do have is the requirement that our exchanges have their own market surveillance function. So that's 24-hour real time, 7 days a week, 365 days a year. We have also added in the requirements to actually specifically bring in the market abuse provisions. So that's whether it's insider dealing, market manipulation, and all the different types of market manipulation are brought in into our jurisdiction as well. So if a person is in breach of those requirements, an exchange or we can take action against them. That's particularly relevant, I think, in terms of giving genuine comfort and confidence to the market. Before I wrap that piece together, though, one important bit that we added was actually a trading levy, which I touched on as well. So we know, and we knew particularly years ago, that everyone used to point fingers at everyone else and say everyone's market, their volume was not real. It was bots trading against a bot. It was wash trades. It was all those sorts of things. We put in a simple thing to stop all that in our market. So we put in a levy, a very small levy of 0.00015%. It means if Matrix traded $10 million of value a day, they pay us a levy of $150 a day. It's marginal. That immediately deterred many, many markets. To those who came to us, and many of them have operated for a number of years, not a problem at all, because their view the market was genuine. So if you combined controls over a small levy, and we're not going to recoup our costs, the cost of establishing that market surveillance system of us, it's going to take us a long time to recoup those costs. But having that established, the requirements on the exchange themselves and the others as well, we believe that this will give some comfort, though however small we are, to those genuine participants who want to trade in a market where they know that even though it's a spot market feed, it's actually fully regulated. And the implications then for markets like yourselves and others is not only is that market in terms of resilient and properly functioning, the context of how then the market develops around that in terms of derivative products and other things as well are going to be absolutely fascinating in terms of how these markets will develop.
Mm-hmm. Yeah, I agree with you, but there's a couple of elements which are also interesting and what I've seen in the past, and I'm interested in how you view them. Like I've seen in the past that there was like cases of apparent market manipulation, which was actually cases of people who entered crypto really early on, never really traded. They just invested, I don't know, $50,000, $100,000 at really low prices 5-6 years ago. Then eventually the amount that they held, the whole balance was so huge, they just said, like, I have enough of that. And because they were not aware of what they are doing, they just placed a market order, which moved the market. And that then at the end of the day moved other markets, also non-regulated ones. And then you have a cascade of events. Like that's something which is out of our control, but you as a regulator, how do you address that?
There's two parts of that. One is whether they're an insider. So we have the concept very similar to most markets in Europe and the UK as an insider. So any person doing that, knowing they're doing that, and potentially moving the market to benefit themselves economically on the other side of a trade, we will see that. The bit that we never really talk about publicly, and Bastra, maybe you're trying to draw that out, is we can see every client. So without going into the details, we will know every client in the market, right down to whether it's my mum in Australia that trades on those markets as well. And if my mum in Australia is trading on your market and other markets in our jurisdiction, we will also know that as well. Particularly relevant. And we have a lot of interest from regulators around the world on the same point, Bastia. I suppose it's one of those ones where we're going to have to show it's operating and watch that space.
Yeah, great. Thank you, Simon. I think this is a topic that we could drill into for next hour or so. We're being chased, so we need to wrap it up. Thank you. It's good to talk to you.
Thank you, Vasja. Thank you, everyone.
And thank you so much, both Vasya and Simon, for your perspective on the regulated market growing throughout the UAE. Launching and building a regulated virtual currency marketplace requires significant investment and resources and expertise, and it's really encouraging to see the progress that Matrix has achieved this year. And also, Simon, really want to thank you for sharing your perspective and also the perspective from Abu Dhabi Global Markets on regulatory oversight for virtual asset markets. Up next, we are thrilled to be joined by a leading group of panelists throughout the Middle East who are going to talk about how this ecosystem is growing and expanding and maturing in this region. This session is moderated by Laura Abdul Malak. She is the editor-in-chief at Unlock Blockchain Media. Laura, I'll pass it over to you next.
Thank you, Perian. I'm really glad to be here today, and I'm glad to be among, great people in the industry. Just to, quickly get it started, because I know we're short on time and we have, interesting topics to discuss. Today with me, we have three individuals. Randall Little, who's the Managing Director of Financial Technology Partners, which was named the Investment Banking Firm of the Year by the M&A Advisor. He's also previously worked in JP Morgan for many years prior to FT. We have with us as well Mrs. Michelle Tang. She's the Head of Business Strategy at blockchain.com. And prior to this, she held the position of VP of Business Development at FTX Crypto Derivatives Exchange. And even before that, she was in the venture capitalist sector. Of course, you've already met Vasha Zupan, who's the president at Matrix Exchange. He was previously the COO of Bitstamp, and today he's building the next generation global virtual assets and cryptocurrency exchange all the way from the UAE. So thank you all for being with me today. Hello? Okay, so I just wanted to start. I'm gonna ask like every panelist a few questions, each one based on their own area of expertise. So can I start with Randall?
Sounds great. Thanks, Laura.
Thanks, Randall. So, you have this vast experience in the investment realm on the global scene. And today with all the investment that's happening in alternative investment tools and markets, what do you see that's going on with the crypto assets and others? I mean, what's happening today?
I mean, I think that, we've been looking at the space for a number of years now, but what we've seen is literally a sea change of acceptance and interest in the space. I mean, certainly over the last year and a half, where certainly before there was a lot of firms that were focused on crypto in particular, but we've seen a huge change in terms of just interest and acceptance in the growth equity and later stage investors, and as well as strategics, where for later stage investors went from kind of crypto curious to done a lot of work to actually actively looking for investments, actively asking for them. And strategics in many cases understand that crypto is going to be something that they need to integrate into their business. I think, longer term, it's going to be something that instead of just being thought of as crypto, it'll be thought of as kind of like the fabric of everything you do within fintech. Fintech is where I focus, where our firm focuses. So, it'll increasingly become the base layer, but I think that acceptance is just starting to happen with a lot of the bigger firms who have massive distribution, massive access to clients. So I think we're super early days, as is often said, but we see it in spades every day.
Thank you, Randall. So I'm going to go on with my next question to Michelle. Michelle, hello?
Yeah, I'm here.
Okay. Michelle, you've been in so blockchain.com, has been in the crypto scene for some time. You recently joined, and you've also had experience with FTX. How have you seen the evolving of crypto exchanges globally, and how do you see this, if any, in the MENA and African region?
Yeah, so I think that's a really good question. So blockchain.com is primarily a wallet company. We have 36 million verified users and 77 million installs. We do have an exchange as well. But yeah, I mean, I can definitely speak to that. Like if you look at, for example, the growth of FTX, it happened at such a fast clip. And I think you're seeing new entrants able to come in, implying that maybe the barriers to entry aren't that high on the exchange space. And what that means, I think there's a lot of opportunity for regional players in different markets to pop up. And I think sort of what is a defensible moat is if you kind of have the on-off ramp and the payment rails kind of connected into banks. And that's what we have at blockchain.com, because we are an on-off ramp. So I think in particular in MENA, like you're seeing Matrix, Midchains are the two that have, kind of the licensing that allows for kind of the most leeway, I think, in my opinion, the greatest advantage relative to other players. And I think another company that's interesting is Rain in Bahrain. So kind of Coinbase validated that by putting money in. But I think, it's really early, and I think there's a lot of opportunity for different players to come into the space or different local teams to build. In Africa, in particular, like I think there's a lot of opportunity there, and there's really not that many fintech companies. So we're invested in a company called Yellow Card, which is great, but there's maybe a handful of other players that are really interesting, but still super, super early.
Mm-hmm. Thanks, Michelle. I'll get back to you both. It's just, I'm going to ask Fasa something because, like you were saying just now, Michelle, there's the Midchains, there's Matrix, and there's Rain, and there's others. Vasa, you've seen in the past, year or so, this uptake in terms of licenses for crypto exchange in the region. We have more than 1,000 crypto-related entities that want to sign up in the UAE alone, in either the GMCC or other places. So when you guys decided 2 years back to set up a global exchange from the UAE, what were you thinking, and what did that mean to you? Why then? Why did you think about that then? And what do you mean when you say a next generation exchange? So what is a next generation exchange?
Yeah, Laura, thank you for the question. As we have discussed with Simon before, the most decisive kind of part of our decision making was looking for the jurisdiction which is really strong, which regulates exactly what we are doing. In Europe, partially also in US, they are not really regulating, or at that time they were not regulating exchanges per se, but it was more like payment institution part which was regulated, and the crypto part, the exchange part, was not really regulated, or in some cases even today is not yet. So that's why this decision, because we do believe that regulation is super important. We also believe that in the future, all these non-regulated players will slowly go out of the market because the regulation will become stronger. And for the real big money to come into the markets, this is absolutely needed. For the institutional play, you cannot have something like half-baked. I would slightly contradict Michelle, because I don't think the entry of the barrier to entry is super low, at least not on the regulated side. If you want to do a non-regulated play, that's a different story. Then the barrier to entry is relatively easy, or is doable. There's a lot of competition. I believe that this market is not that the single player, the biggest one, will win and everyone will die. I think there's space for multiple players on the market. But compared to non-regulated exchanges, the regulated play is really much more difficult. It is not that easy to enter. And here we have advantages because we have expertise. We have the backer, the capital to do it. We have the patience to do it, because the entry and the journey is not fast, not something what we've seen in some of these non-regulated players that you have mentioned before. It's much different pace. And when I'm talking about this next generation, that's all kind of parts of legacy. We have no history of onboarding with KYC. We have no history of market without proper surveillance. So I think this next generations will be this kind of much safer, much more stable venues to trade, which will also attract eventually much bigger volumes and much more senior institutional players in the market.
Thank you, Vasha. I think then you're bullish on the virtual asset scene and all of the other products that come from it, that will arise from it.
Absolutely. Otherwise, I wouldn't be sitting here. I'm super bullish on the scene. And as Randy has mentioned before, I think it's just early days. We are just entering this market. It's still really early days.
Yeah, that's what I wanted to ask Randall right now, because Randall, I wanted you to, what opportunities do you think we will start seeing in the MENA market with the advent of, regulated entities, with the advent of all of these new derivative products and from the fintech scene?
Yeah, I mean, I think there's a huge opportunity, as kind of everyone's pointed out, just given, I think that there's been a lot of strides in terms of just providing regulatory framework, which is the basis for everything. I think that there's also a lot less, legacy financial infrastructure to deal with. And in the broad scope of things, there actually aren't massive pools of liquidity that are baked in anywhere. I mean, I think I looked last time, and I think there's the spot markets for crypto are like $50 billion a day. You compare that with like the FX markets, which are like $6 trillion a day, where a lot of the legacy incumbent advantages and just liquidity pools are just baked into the market structure. That has not happened yet, as far as I can see, within crypto. So I think that's a huge opportunity. In terms of kind of the way that we see investment flowing is, I think first, just in the core infrastructure that is common in every other market. That's very easy for people to understand. These are well-known models of what institutional traders expect, what consumers expect, and how do you translate that into something on crypto rails. I think that further out, there will be more opportunity for more investment to come into more of the DeFi realm, but I think it's still pretty early days for most investors, both strategic and growth equity investors, for example. Not for crypto native, who are definitely more bleeding edge, but I think that's where the biggest opportunity is long term. How do you provide access to that complex space where there are a lot of risks still, there's a lot of unknown unknowns? How do you make that easy, convenient, safe to interact with? So I see that coming along over the next few years as well.
It's interesting, Randall. Do you think that DeFi can be regulated? I mean, could Matrix Exchange have DeFi products in the midst?
I think one of the biggest barriers is just figuring out the issue of identity, which is basically trading off the need to know who people are in certain circumstances, but then not having that abused, or not having the possibility of that being abused. We've come across a couple companies that are working on that problem, but I think that there's going to have to be some middle ground. I don't think it'll ever be huge if it's totally anonymous, and I don't think people will find it as attractive if it feels like it's going to create mass surveillance. So I think that there needs to be kind of a
middle ground,
technological middle ground for that to work. I think once that falls into place, I think it is the future, and I think it will be figured out just based on what we're starting to see.
Cool. Thank you, Randall. Michelle, back to you. I wanted to go and take, a broader look, because we talk about, virtual assets, crypto assets, NFTs, and so forth. But if we look at the big, what brought all this towards us was the blockchain, and you've been in the blockchain investment scene for some time. What innovations have you seen that, the blockchain and crypto have really brought to the world, and how can MENA benefit in the future?
Yeah, so I've only been around for 2 cycles. So I kind of got into the space in 2017. But what's really different this time around is kind of the institutional interest. That's very, very different. I mean, certain friends of mine have funds and they're doing like true operational due diligence. So that's an interesting point. I think in terms of innovation, I think for me, the 2 most interesting things are DeFi. And when I say DeFi, I sort of mean, the open source, like borrow lend protocols. Like that's super interesting because you really don't need an intermediary to create, to kind of create financial assets in a way. And then I think what's also super interesting and something I'm starting to pay attention to or pay closer attention to is gaming. So that's, I think, particularly impactful for, MENA and just generally emerging markets, because it's almost like a form of mining. So like with Axie Infinity, for example, there are families in the Philippines that are supporting themselves by playing this game. And I think that is just a different way of looking at how sort of the real economy can interact with with blockchain. So yeah, and then also I would like to clarify what I said with Vaja, but I think we're kind of saying the same thing. I think there is a moat if you can have an on-off ramp, and by on-off ramp I mean that you are taking fiat currency and putting it into crypto, and that requires cooperation with regulators and with the existing banking infrastructure. I think something I'd like to clarify is it depends on, like Vaja was saying, like the spectrum of regulation, but it's not just that, it's also just sometimes you can send some like a crypto to another exchange and then like an unregulated exchange, and it's really kind of, the rules kind of change, and those are the ones that benefit the most from not having the prior tech deficit of just legacy infrastructure. So I think like, even though some of the exchanges have first mover advantage, there's definitely something to be said, and we'll see how it plays out. But it's kind of wonderful to be able to start from scratch at times.
I agree. Thanks, Michelle. So Vasha, back to you. You've been in the region for the past 2-3 years. You've seen how it's been growing. What are your expectations? I mean, how is virtual assets going to be traded? How is it already being traded? And will it outpace what's happening in the global scene?
Yeah, before I answer that, let me just touch the subject that popped out before about DeFi on
I thought
Matrix.
you would. Okay.
Yeah, I'm sorry for that, but I needed to react. Talking about DeFi on Matrix, I think we touched that a little bit with Simon as well. I'm sure we will eventually list this kind of products because it's just the way that I see the development to go further. Probably not in shape and form as we know them today, but in some kind of version where these key KYC and other questions will be answered and solved, and I'm sure they will be solved because people are working on those problems. Then eventually we'll get to list them as well. And us not being just, I don't see exchanges, the regulated exchanges, only as a on and off ramps. I'm sure we have much more in-depth purpose, which is price discovery, which is serving the market from that area as well. And there's a strong regulated exchanges have a strong position on this. They are really important. going back to your last question about the regional growth, I'm sure that what I can say today, what I see when I came in from like a year ago, started to work in this region, I knew it briefly before, but it just confirms that my view is it's a little bit behind the curve. Which is great, which is good, because people like us can start from scratch. And I agree with Michelle. It's really great to start from scratch. You have totally kind of whiteboard that you can draw in, and it's really good. And it also means that with this space that is happening here, which is maybe slightly slower than other parts of the world, but with all the wealth that is here, and interactions of businesses from West, from East, from Asia, I really see bright future here. And I can say that what we see on the market, the need for the regulated venue to go to, because a lot of the business is done OTC behind the scenes right now, that's something which will definitely multiple the volumes that you can see today.
I agree with you, Lassa. I also think, with the changes that are happening elsewhere, what happened in China, that the regulatory environment in the UAE is the middle ground. It's not, very loose, and it's not very stringent. So I think that also helps to grow this sector as well. So my last question, because we don't have much time, so each one gets a quick last question. We're coming to the end of the year, 2021, and soon everyone's going to start going on holidays and start contemplating 2022. So I wanted to just get, a brief, what you foresee, what you think trends. So Randall, what trends do you see happening in investor interest in 2022? Anything, that's going to pop up, like, NFTs this year? Is there anything else that's going to come up that we haven't thought of? What's your take?
It's hard to predict the next NFTs. I probably wouldn't have projected that, a year or 2 years ago, but here we are. I think we'll probably see a lot more of that at a lot of different use cases. I think in the immediate term, I think a lot of the interest is going to be in kind of the sorts of use cases that I was describing around like neo crypto banking, core trading infrastructure, the borrow lending markets. I think are super interesting. More adoption of retail wallets, for example. And I think that kind of following on to some of the comments that were made before, I think that there's a huge opportunity for consumer-faced businesses to gain a real moat just in terms of building trust and brand and great user experience, because there's a lot of uncertainty in the space, and there are risks that people don't commonly understand. So building that trust that exists in other markets in crypto, I think is a lasting advantage. And on the institutional side, in addition to the licensing and everything we've been talking about, I think a lot of the verticalized models have proven to have real moats, because where you have lots of different legs to the stool in different markets, that obviously becomes very synergistic. There's information advantages for those firms, and they can usually provide better pricing. So I think that you'll continue to see more firms, I think, adopting models like that, and more capital flowing to firms like that. Does that make sense?
That answers my question. That's good. Michelle, do you have anything to add about what you see happening?
Yeah, I think one thing that I think about a little bit is decentralized autonomous organizations, so DAOs. I think DAO fundraising may start to crowd out some early stage venture capital, especially because there's so much money being raised into venture vehicles. And then there's this alternative mechanism of DAOs. So.
Okay, I like that as well. Vasas?
Yeah. What I do predict is that the volumes will move from this gray unregulated space to the regulatory venues eventually. Some of the volumes will just disappear because of the crash from the regulators, but the exchanges like us will definitely grow. In terms of the global, like cutting edge technology, I agree with Daos that this is super interesting. Absolutely impossible to predict next NFT, because that's the beauty of this market, because it's so dynamic, it's never boring, and then that's kept me in this industry for years now, and I foresee this continue, this super innovation on steroids continuing, and we'll see a lot of surprises.
I agree. Thank you all so much. It was really, really interesting to have this talk with everyone. Thank you for having me. Anyone has anything before we end? I don't know how much time we still have, but okay. So we have 5 minutes. So I don't know if there's any questions from anybody out there listening, or Vasha, I just wanted to, there are a lot of these crypto exchanges, the unregulated ones, right, that are starting to seek to become regulated. Do they have an advantage because they've been in the business before, or you think it's going to take them longer time for them to get there?
It's double-edged. Those that are really like on the cutting edge of the gray market, or if not even the dark market, those of them have huge resources, but they also have a lot of problems. So it's not just money that can buy you into regulation. It's something which is more important, is having this mindset of doing things the right way in your DNA. So doing everything in principle like that, that's the biggest problem for them. Not just all of the history they have and all of the accounts that might not have sufficient or even none of the KYC, all the history on the market itself with the abuse that was happening, but the mindset itself is one of the biggest problems. And I would foresee some of them might succeed. Most of them, I don't think so.
Okay, I'm not going to name names or anything like that. So, and my last question is this: when you get regulated with a tough regulator, right? You pass that, the test. Do you think it makes you easier to go global and get licensed in other countries, or is each one different?
They are slightly different, of course, or there's depends on which markets you look at. There could be also big differences, but absolutely having some benchmark that you crossed already, it's much easier than to go to other regulators. There's always some similarities, and there is enough similarities to take that across. They will all have some requirements for some local presence in one or the other shape and form, more or less. So that has to be adopted. But yeah, I would say it's easier.
Okay. Again, I want to thank you all. Michelle, do you have anything else you wanted to add before you take a flight?
No, okay. Thank you.
Thank you, Randall. Thanks, everybody.
Thank you.
Bye.
Thank you so much, Laura. And
Thank you. Goodbye.
Thank you, Vasha. And that concludes our programming for today. Again, huge thanks to Matrix for partnering with us on today's programming. Before we sign off, I just wanted to thank everyone who joined us, all of our viewers, for our conversation around entering the Matrix. And also just wanted to remind everybody that we'll be hosting the DC Blockchain Summit 2022 again in person on May 24th. In our nation's capital in Washington, D.C. Mark your calendar. We will have formal invites going out soon. Until our next event, you can follow us on Twitter at Digital Chamber, and we look forward to having you back here at Parallel next month. Thanks so much.